Hello and welcome to another episode of Wealthi Expat. This week I've got Tiffy on the show with me. Tiffy's the general manager of our office in Sydney. Tiffy's also an expat living in Australia now, so she owns property in New Zealand and then also a couple in Australia. It's a pleasure to have you on the show, Tiffy, and I look forward to chatting to you today in our episode.
Thanks for having me, Chris. How are you doing?
I'm good. I'm doing very well. It's been quite a grey day or grey morning in London today. But what to expect, it's second nature here now almost. But how have you been? How's your weekend been? First weekend of lockdown.
First weekend of lockdown, it was good that we had some very, very nice weather and we can exercise outside. So all in all, can't complain.
Definitely, you got to take advantage of it. I'm very, very jealous, but oh well, it is what it is. Hopefully you guys aren't locked up for too long. Fingers crossed that it's only, what is it, 2 weeks at the moment that they've said?
It is 14 days for the time being.
Okay, interesting. And is it just New South Wales, or have they extended it into Victoria and Queensland now?
My understanding is that Victoria is still okay. I'm guessing Queensland is still okay, but there's restriction between traveling between one state and another, really.
Okay, that's fair enough. Okay, fair enough. Well, interesting. Hopefully you're not locked up for too long. Fingers crossed you're out of it. Can get back to the office, I guess,
100%.
as soon as possible, as much as you want to. Okay, so today I thought we'd talk about a number of topics. Obviously, you've got some experience in investing overseas. A lot of the clients we'll be dealing with over in the UK, will also be Australians that are looking to invest back home. So we'll be able, I think they'll relate with quite a lot of what you'll be able to provide today. Dig into some of your tips, you could say, into investing overseas, what you've seen, some of the worst tips you've maybe experienced and some of the better tips that you've received. And then we can talk about some of the tax benefits as well, obviously investing property and the deductions that you can take away from it. And yeah, just a bit more about your experience in investment
Sure.
in overseas property, really. So
Sure.
yeah.
Should
So I
I
guess to start off, where would we like to start? So I guess, how did you make your first investment? What was really the process, I guess, behind you stepping onto the property ladder in regards to investments?
Okay, important to say that I didn't start that long ago. So I purchased my first property January 2019. And so far now I've been able to invest in 5 properties in the 2.5 years that I started investing. Now, I don't own 100% of all of my properties. I actually started doing joint venture agreements, which means that I have a partnership with someone else. And at the beginning, I was owning a small percentage of the properties, and then it started growing, and now I own 100% of some of those properties. Now, the reason why I decided to invest overseas is because the first thing that I was able to figure out was what I actually wanted in my life. And if I know what I want, I can go and get it. And for me, I decided I wanted financial freedom. I don't know if you've covered this topic in other podcasts, Chris.
No, we haven't yet.
Okay.
It's all yours.
So financial freedom or financial independence, anyone can have their own definitions, but for me is having the passive income of my investments cover my cost of living. It does not mean I'm rich, because if I keep my cost of living low, then it's way easier to become financially free. Whereas if I keep increasing my cost of living every time that I get a salary increase, for instance, then it will become harder and harder for me to achieve financial freedom. So that's what I decided I wanted. And once I decided that that was my objective, I thought that I wanted to start investing in using the cash flow strategy. Okay. Now, the reason why I decided to start investing in New Zealand is because at that point in time, it made more sense to me than investing in Australia, going for a cash flow strategy. Now, for those who don't know what a cash flow strategy is, basically, I'm still investing in developed countries. I would not go to developing markets like Argentina to invest, because I still want some safety around my investments. But I was investing in what I call tier 3 cities and tier 3 suburbs. So I would not want to be living in any of those cities and suburbs that I bought properties, and the cost of the property is quite low compared to the rent that you'll perceive. Okay.
Sure.
And that's how I defined that I wanted to start investing in, let's say, New Zealand.
Yeah.
Now, tip number one is, if you know what you want, you can create a strategy. It's way easier. Very hard when Chris or any of the Wealthi team members are talking to clients who have no clue as to what they're wanting or looking for, right?
Exactly. I guess another question on that point would be, how did you go about your research with identifying an area that in New Zealand, for example, that you wanted to start off with? What kind of drove you to some of the tier 3 areas that you were looking at?
Okay. So I actually did a property investment course, and no matter whether I'm looking at property in Australia, New Zealand, UK, US, whatever country, I always follow the same rules. And I try to look at those cities that have a good track record on high growth. I always go for high growth, whether it's capital growth or cash flow. I still want high growth.
Yeah.
There's definitely some targets as to population and minimal populations, because of course the smaller the population, usually the cheaper the property. But I want to make sure that it's not a very small market where like the amount of people that will want to live in the area and the amount of work. Basically, I don't want to be dependent on just one industry, and if that industry turns around like mining, then I'm in a very hard situation.
Of course, yeah. Looking for those areas that are already starting to be established and have, infrastructure projects or connectivity projects already.
Exactly. And once I've checked which are the areas that are seeing the most growth in a country, and I've filtered out population, I will rank them from cheaper to more expensive. That's on the cash flow strategy, which is completely different to the capital growth. And that's what I did. And this analysis you have to be doing all the time, because whatever is are the best cities right now, in 6 months' time, that could have changed.
Yeah,
okay.
Definitely. Constant shift of gentrification, you could say. The areas have changed. They're just the way in which we are moving and living now.
Exactly. Different. And also, populations could have changed, whether it's external, internal migrations, but also price points can change a lot in a very reduced amount of time.
Of course, look at Australia this last 6 months or 12 months, you could say now, but it's just gone crazy.
Crazy.
It's what you want, though.
It's what you want, and it's the good and the bad. Once you go into a market that keeps going ballistic, and it's yay for the properties that you own, but
just ride it.
If you want to keep buying, it's tough, because now you no longer can find anything in the price points that you were finding 1 or 2 years ago.
Of course, yeah, and your expectations would have stayed the same almost, thinking it's only been 12 months, it's only been 6 months, I can get in for the same price point, and
forget it.
The harsh reality. Exactly. So that's an interesting one.
Okay. It is. So getting started for me, anyone who will buy their first property, the first one is always the hardest one you'll ever do. There's always going to be some fear in there, and you just need to take the jump at some point and go for it. And you can put a lot of work up front, always run your numbers. And that's what we help clients with, running their numbers and putting everything together, all of the research together. But for me, whereas I see the positive of basing it on numbers and being happy and getting excited when numbers are exciting, some people have that need to be able to go and see properties. I bought properties without seeing them, and I'm happy that I did that.
Okay. And how did you go about that process? How, say there's a property, say it was in Argentina or say New Zealand, wherever it may be, but how did you go about that without inspecting the property? Did you have someone on hand to go and look at it for you, or what was kind of your stages there?
That's where your team plays a massive role. And part of putting the work up front is putting the energy and time to find and put together that amazing team. And you will have like an accountant, a solicitor, a mortgage broker, a property manager, someone that gives you good advice, whether it's other investors, whether it's a team finding properties. I've worked with a sourcing agent in New Zealand in my last deal. I am now an expert in Australia and not in New Zealand, and I had to pay someone to do what I do here in Australia back in New Zealand.
Oh. Well, you know if they're doing a good job or not, at least.
100%. And then I realized what a great service we provide in Australia, because my experience wasn't the best with this particular sourcing agent. I was expecting the same level of service that we provide to our clients, and I wasn't getting it. And that's where you start getting a little bit disappointed.
Of course, you're used to a certain level of service and you're not delivered. That's interesting. I guess that's a lesson to take away from it, to almost manage those expectations in regards to what services might be at hand to you. But at least, being Wealthi, the team's a strong team and we're all over the process, and having you in charge as well, it's definitely plays in our favour, especially when there's going to be people in England trying to buy back home in Australia.
Yeah, and for me, how my journey has gone is I've had luck. The luck element always is there, but also I think I create my own luck. I decided to gain knowledge, get started, push very hard. And those properties that I bought in January and March 2019 more than doubled in value in 2 years. Yeah.
It's almost similar to what you were saying about not waiting. Almost, if you're in a position to hit the button or hit the trigger and get the property bought, then what are you waiting for? Every day that you miss out on is a day of capital growth, or it's just the potential that you're missing out on that investment that you should be acting on now, really, in a sense. And that's not trying to force anyone to do something that they don't want to, but it's better than sitting around. And you don't want money in this day and age. You don't really want your money sitting in the bank. It doesn't do a great deal for you, and it's almost a bad place to put your money at the moment. So if you've got the means, it makes perfect sense to get straight into the property market, the investment market, and what you've done, I suppose, and taking the plunge. Now you've got 5 of them. So
once you
get one, you don't stop. The addiction starts.
It's an addiction, and also sometimes you can learn a lot of things through other people's experience, but you also need to get yourself involved, and there are some learnings that you will only learn if you go and do it, right? So for me, one of my biggest learnings is I've changed strategies. So I mentioned that my objective is clear and I'm going for financial freedom, and that's why I started in New Zealand with a cash flow strategy. But then I also understood that no investment is perfect, and the cash flow strategy usually gets a lot of sort of low quality tenants. So I mentioned that I'm in tier 3 cities, tier 3 suburbs, where there's a lot of internal migration, people changing jobs, and quality of tenants is far from great. So that's the downside for a cash flow. Whereas the cash flow looks amazing on paper, when it comes to reality and the headaches it creates, a cash flow strategy, you need to have a passion to be able to deal with all of that. And that's what I realized. Okay, it's great that I started this way. It's great that through my first investment this year, I was able to go release equity and buy a property 100% equity release without putting any of my savings. And that's why I bought this year again in New Zealand.
Okay.
But I decided that I wanted to start investing in tier A cities like Sydney or Melbourne, because I wanted to not have to deal with as many problems with tenants, and going more for a capital growth strategy that can also take me towards financial freedom.
It's interesting. I guess just out of interest for myself, what sort of areas in New Zealand have you bought in? Or what are the places that you have bought in New Zealand? Maybe there's a couple of Kiwi listeners, who knows, but where were those spots?
So I bought first in a place called Wanganui. It's in the North Island, like southwest, and like
Yep.
closer to Wellington. Mostly out of the big cities is closer to Wellington. It's probably a 4-hour drive from Wellington. And then I went to Timaru and Temuka, which are in the South Island, in that proximity to Christchurch.
Okay.
Yeah.
Okay,
Now,
interesting.
I had to leave Wanganui, and that's where I'm saying things change all the time. When I went to remortgage and buy something with the money out of the remortgage, which originally I wanted to bring to Australia, but the banks would only release equity if I bought other property in New Zealand. So I was like, okay, what's going on? Wanganui, so unaffordable, more than doubling prices. It doesn't make sense anymore. It's more expensive than buying in Australia. And that's where I ended in Timaru and Temuka, because they've seen good growth in the last year, but slower growth than Wanganui over the last 2-3 years. So that's why it has become a bit more affordable, really.
Interesting. So that's that'll be interesting. I guess I haven't looked into New Zealand a great deal, but it's interesting to see that it's not only the Australian market at the moment that's really performing quite well, but at an international level, almost the UK market at the moment seems to be charging on, and the even the higher end of the market. I think the sales over 5.5 mil at the moment in the UK have gone up about 70%. So there's money walking out the door really in regards to property, which is it's interesting to see despite being through such hard times over here. But it's good to see that the rebound's happening, and at an international level, there seems to be more confidence back in the market, and things are happening now. Deals are happening, property's changing hands, and the market's booming, you could say.
It is.
So it's interesting to know. It's interesting to know. I guess with on tax logistics, essentially, you're probably a lot more accustomed to this than I am. But I guess in Australia, you can deduct on some of your depreciating assets within the building. I guess, do you want to give us a bit of a rundown on that?
Yeah.
It's not financial advice, but we could give some examples of it, really.
For sure. So, as Chris has just mentioned, we're not allowed to give financial advice, but I can talk out of the experience of my own properties and what I've learned. So I want to say that I think the biggest reason, before I go into tax implications, the biggest reason why I would want to invest in Australia if I am an Aussie expat living, whether it's UK or anywhere else in the world, really.
Yeah.
The number one situation is that anyone that is living abroad is not contributing to their superannuation. Basically, it's going to be very tough when you Aussies come back to Australia. Even if you're like still young, I want to say 40 is very young, but still you probably missed quite a few years of superannuation. And in the long term, that has a massive impact on how much money you will have when you retire. So that is a huge reason why, if I were an Aussie living overseas, I would want to invest in property in Australia, because I want to make sure that I keep building investments that I'm not wanting you to wait till retirement. I'm not saying you have to wait, but you need a plan.
Yeah, and exactly. And if you're not contributing to that super, you need to have an alternative pension plan in place, essentially. It's a very good point.
100%. And when you buy in Australia, if you're an Aussie again, you know you are born and raised in Australia. So you know the rules of the game. For me, it was pretty hard to change my mindset and behave like any Aussie would behave, just because I have my own limiting beliefs from being born and raised in a developing country like Argentina.
Yeah,
okay?
Of course. How is the mentality of investing in Argentina in regards to property?
It's a ridiculous mentality where we don't trust our governments, and the macroeconomy. It just, I wouldn't be able to explain in just a podcast how it behaves, but we are having more than 50% annual inflation, and I would not invest in a developing country just because I know if I bring my money there, like developing countries love when you bring any foreign currency into the country. Now you want to take it out. That's a massive nightmare. Like you will get maybe 50% taxed on just trying to take people's money out. Like, I don't even want to give advice, but it's ridiculous. Yeah.
Stay away.
Exactly. And for me, having that mindset that I'm investing now in stable economies, and that over the last 10, 20, 30 years, Australian property has performed so well. It's just outstanding, right? So if I think I'm wanting to build wealth and achieve financial freedom, when I look around the world and I see the most wealthy people, I believe the stats say that 70% of those top 500 wealthy people have built their wealth through real estate. So for me, that's an amazing reason to go into property versus any other asset class.
What a driver. And it's a real asset too. I think that's what draws us to it, is physically being able to touch it, almost opposed to stocks and shares or crypto or whatever it may be.
It's easier to understand how it works. And then for me, it's amazing to have, this is the hardest concept to understand, the power of leverage. But what I mean by this in very simple terms is, if I invest 50K in stocks or crypto and I haven't leveraged myself, I haven't asked for that money elsewhere, I just went and put my savings there. If that grows at a 10%, then it's 10% out of that 50K. Whereas if I've put 50K towards a 500K purchase price, when that property grows at 10%, it's not the 50K that have grown, but it's the full 500K purchase price that has grown at 10%.
It's grown, definitely. Yeah, put less money in and get more of a return from it, almost, and now, benefit from that growth.
Chris, I realize I have not answered any of the questions you asked me. So mentality in Argentina is we hate debt because our debt carries like interest rates of 30% because the economy is not stable enough. There's too much inflation. Okay. So we do the opposite to what a normal, rational person in a normal country would do. Whereas it's a bad word to have debt if you're buying property in Argentina. But then you go to the supermarket or you buy clothes and you pay with a credit card in 24 months with no interest rate, because you know that your money will be losing value over the next 24 months. So you are getting into debt for things that won't generate a return for you. They're bad debt, like there's no income on that you'll get in the future. And then for all of the things that we should be using leverage for, we don't.
Sounds logical. Sounds like it makes sense.
Yeah, so it does require
interesting. Okay. Yeah. You've got to be switched on when approaching it. So does that mean people in Argentina are almost paying for their houses in full amount cash almost, and paying the whole asking price?
That's why when I hear anyone my age in Australia saying house is so unaffordable, I will never be able to access a property. I come from a country where it's even harder, because we have a tenth of the salary that you get in Australia with a very similar cost of living. And then you have to pay all cash. Properties will be cheaper, but you're also talking having to save 100 to 150K for your own home. So saving that amount of money, like anyone my age, if they've bought properties because they're fortunate enough that their parents could help. Otherwise, it's impossible.
It's a long time saving. That's almost waiting 10, 20, 30 years of full-time work and then eventually getting on the ladder. So that's
100%.
not ideal. It's interesting. Okay. Well, I guess going back to the tax point now. So we're talking about the deductions that you can make from your real estate assets in Australia. So did you want to explain in a bit more detail how you go about that?
So I like investments because they're treated just like any business is treated. Whereas as us normal persons working as employees in a company, our single biggest expense is tax. Like, we get paid and automatically that money gets taken away from us. We don't even see that tax. In in property investing, you behave like a company, which means that you receive income and then you're able to deduct all of your expenses and you only pay tax on any profit that you would have made. Okay. Now, when we are running our numbers, we will take any rental income and we will look at what it means when you deduct your property management fees, council rates, water rates, insurance, maintenance of things that break. We also estimate some money for that. And of course, your mortgage. And then we understand what's our cash flow situation. So cash flow is net income minus expenses. And we understand that before taxes and after taxes, because if you are buying a brand new property, then you are able to make something that I call a paper loss. So it's a non-cash deduction. Basically, all of you, the government says you are able to depreciate your property, like the bricks of your property for the first 40 years of it, and you're able to depreciate the fixtures and fittings for the first 10 years of that life. Okay. And that's not money coming out of your bank account. You're not losing money every month. But when you're going to the ATO and doing a tax return, that acts as another expense. Okay.
Sure.
So,
okay, interesting.
Everyone is different. Everyone has different objectives. And I mentioned my objective is cash flow and financial freedom. But some people will come to us saying, I have a super high income and I'm happy to go, like I have a few properties and now I'm at that stage where I want to go for a more advanced type of property where I'm happy to go for a higher purchase price. I know that my cash flow could be negative even before tax. And if that's what the client wants, we'll find them that. And then anything that they lose before taxes and with the depreciation, then they'll be deducting from their income and offsetting that tax that they pay year on year.
Interesting. Okay. Yeah, because I think it's going to be an important thing for people to remember over here when investing back home, that you have that 40 years of depreciation on the bricks and mortar and the bones essentially of the building, and then 10 years on the fittings and fixtures that are inside. So that comes down to what your washing machines and your your wet appliances essentially, you can say as well, couldn't you? And all those curtains, carpets, all sorts. So it's I think it's definitely something that be beneficial. So you might be able to give some examples, but with someone living over here, and we kind of touched on it earlier, so you're earning Great British pounds in income. How do you actually go about reporting that in Australia, for example? It's probably something a bit too deep for now, maybe, but I guess there's also that point whether it counts as you actually put it on your income in Australia. Do we have to provide that sort of information?
So I want to say that first, I would always involve my accountant. And if you don't have an accountant, where Chris and I and the Wealthi team can always recommend some great accountants, because every person's situation will be different. And I think it will depend on a country by country scenario, because some countries will get double taxed and others won't, I'm guessing. So you have to, I cannot give a rule of thumb for anyone really, right? Now, I want people to understand is that if your objective is, hey, I want to create a cash flow or have a neutral or positively geared property pre-tax, because I'm at this point in time for the next 2 years, I'm not paying any tax in Australia, I'm working overseas, then that's clear instructions for us to go and find amazing deals that will deliver on a strong cash flow pre-tax, so that right now you won't get any tax back because you're not paying any tax in Australia. But if in your plans you're hoping to go back to Australia in 2 years' time, then for sure by the time you're back, it's still positively geared pre-tax. But when you do your tax claim with the ATO, you will have extra deductions like the depreciation that will allow you to reduce the tax you pay.
Yeah, definitely. I think that'll be very beneficial. And I guess just explaining that to people overseas as well as it will. I guess you'll be able to explain it better than I would. But the way in which the 10-year depreciation works and the 40-year depreciation is it's based off you not living in the property. Is that right? Or if you've lived in the property, you can still claim on the bricks and mortar, and if you and they're not as much on the fittings and fixtures. But is that correct? So if, say, someone had bought a property over here, back in Australia, we've got still, they go back 2 years into owning the property. They've got 8 years left, essentially, on their depreciation. Is that how it would work in a sense?
You're right. So there's a few things that you can claim as an investor that you cannot claim when you are living in a property. So all of your expenses, the interest you pay on your mortgage, and the depreciation. All of those things, if it's your own home, there's nothing you can do about it. Like there's no tax deduction. Whereas as an investment, you're behaving as a business. So all of the expenses come before you do your tax return. Now, what you were just mentioning about depreciation, it is true that the law was updated in 2017, whereas before you could have lived in that property and then moved out, make that property an investment and claim the depreciation of the fixtures and fittings. Now the law has been updated to say that if you live at any point within those first 10 years, you live in the property, the moment that you convert it back or for the first time into an investment, you no longer can claim the depreciation of the fixtures and fittings, but you can claim the depreciation of the construction, the build itself.
Building. Okay. Oh, that's interesting. Very interesting. Okay. I guess what else? So if we actually, another key point that I'm sure people over here will be able to relate to would be, how did you go about your funding whilst, actually you're probably in Australia at the time, but being overseas and getting your funding, did you have any issues with that? For your New Zealand property, did you get the mortgage in Australia, or was that all done in New Zealand?
So this is the rule of thumb of what my experience has been. Whenever you're getting a property in a certain country, you will have to fund it in that country. Okay, so if I'm investing in Australia, I need to get a mortgage or some sort of loan in Australia, most likely. Most likely, not always. The same with New Zealand. Okay, so I actually had to prove my income in Australia, and probably it's a bit tougher. I get more questions asked, but that's fine. And I want to share a personal experience, which is I actually had to start using third-tier lending. Some people will call that hard money lending. And basically you pay a higher interest rate and get less questions asked. And the reason why I did that in particular is because no bank wanted to lend me money at the beginning in New Zealand. So I was paying an 8.9 interest rate. And my numbers still worked. It was a short-term solution.
Really?
And that's the thing. So some people will tell me like, 4.5%, like that's craziness.
So
like if your numbers work, just go for it. And sometimes people get really caught on the whole interest rate. And you can always remortgage. I'm not saying remortgaging is easy, because I thought it was going to be easier than what it actually was. I thought I was going to be able to remortgage in 3 months suddenly, like that. And no, it took me 2 years. But you can remortgage every 2 years.
You get there, exactly. 2 years is fine.
Yeah, exactly. So you can get lending, and I would suggest that anyone who's an Aussie living overseas wanting to invest in Australia, or even non-Aussies living overseas wanting to invest in Australia, there's second and third tier lenders that will definitely talk to you and give you some good deals. Better than my 8.9% for sure.
It's better now.
Yeah.
I guess that goes back to the point around having that good team around you, having the right mortgage broker, solicitor, accountant, and making sure the process is as seamless as possible. And when you've got the team on hand in Sydney, and you guys fly around the country looking at our sites, all the projects that we're working on all the time. So it's good having the eyes on the ground, and the confidence. It instills confidence in investors over here, and you guys are established at the team in Australia, established team and well set up, and things are going well over there. So I think with the right team around you, you can make it work. I guess as we close the conversation, is there any top tips that you'd like to give before we go? I guess we touched on a few of them. You just mentioned kind of some before, but if there was any top tips or worst investment tips that you've received and would like to share, we're all ears.
Okay, some tips. No matter how much money you've got, even if you think it's not enough to invest, if you are eager to invest, then you should be contacting Chris, because you might be surprised that you might need a lot less money than what you thought you needed to begin with. Okay. Then sometimes this, it's not for everyone, but if you really want to make it happen and you don't have enough money, then there's other ways around it. Like, I know my experience, I'm not 100% of the people, but now I've put myself in situations where I've found investors who will own property with me as a joint venture agreement. I've gone and raised money with angel investors. I've done hard money lending. I've done traditional lending. There's so many ways to fund the deal.
As well. There's all different ways of getting on the ladder now.
There's so many ways. So you can make it happen. You just need to want to make it happen. And until you don't take action and get started, like, nothing will happen. So when people come to me saying, oh, I feel like there's a lot of risk, to me, the riskier thing you could be doing right now is leaving your money in a bank account that gives you almost zero interest rate on your return. And your inflation, the inflation is higher. So basically you're losing money every single day. So to me, you manage risk with knowledge, and the team, in my experience, has been my biggest, like, if I tell you focus on something, is finding a great team. And I always say this, I'm usually like low profile, and I don't think that I'm great. Like, I would never say that out loud, but the Wealthi team is outstanding. Like, we don't sell ourselves enough for the amount, like the level of service that we deliver and how much we care. Like, it's the care. Like, we actually enjoy what we do, and we believe it.
Exactly. Treat it like it's your own. It's your own little baby, your own investment property. Just be a part of the whole process. Definitely. I agree. It is good to see. It's a great team of people.
And we will recommend only things that we would buy ourselves. And I've had, like, fortunate enough, one of the Wealthi projects I absolutely loved, and I was like, I'm buying one, and I had 7 friends follow, and that's it. Like, if I believe in it and I would sell it to my friends and my family, then other people can believe in it, basically.
There's trust in everyone. Exactly. Mm-hmm. They're not thinking, oh, she just wants to make a quick commission. It's being able to relate to it, definitely. So that's good. Well, thank you very much for coming on the show today, Tiffy. It's been great to speak to you. And I hope everything goes well with growing that portfolio. I'm sure you'll have, next time we speak, you'll probably have 10 under the belt. But it's been great to speak to you, and I've really appreciated it. So thank you. And then for everyone that's listening, I hope you've enjoyed today's show. Don't forget to subscribe and like the show on Spotify or YouTube, whatever you're watching it on today. And I look forward to the next chat with the next guest. And until then, thank you very much.
Thank you, Chris. Bye-bye.